Hello, everyone, and welcome to another episode of the Reinsurance Podcast. I'm your co-host, Jared Lee.
And I'm Ben Rose. Hello, everybody.
Hello, good to see you.
And you too.
Looking very cozy in your shawl neck jumper.
I was going to wear this around Lloyd's. Is it not professional enough?
It's more than professional enough.
Good. Okay. It's very cozy. As Cordy, our producer, put it, looking at my most comfortable.
Yeah. It's the kind of jumper that would come with cognac if you bought it.
It'd be a compelling business. Can you imagine that on the Christmas aisle? You know, like buy someone a jumper and a cognac as a gift package.
Don't know in a box. Yeah. But that sort of tangent is only means that we are in an episode that we are super excited to talk about today, which is reinsurance technology or
Reinsurtech.
So I thought it would make sense for us to start a little bit at a very high level, like what is Reinsurtech? Why do we think about it as its own category? And I was thinking about it kind of from the lens of like a taxonomy of sorts. So you have the much larger fintech category, financial technologies. And then after a number of years, there's enough products that coming out of financial technology that were focused specifically on insurance that Insurtech became its own sort of startup category. And what we're sort of seeing is another iteration of that where enough technology is being built within Insurtech that's specifically being focused on just the reinsurance element that it warrants its own category. And this is how these things begin to emerge naturally. We like to see this is where very much where we sit, but there's a bit of a history of this maybe. The first sort of players in reinsurance technology, I guess, might be AIR or RMS, sort of late 80s, both out of the United States, catastrophe modeling companies, sort of RMS out of Stanford and AIR out of Boston, but looking at sort of how can we understand the exposure to catastrophes from hurricanes and earthquakes, respectively. And then over time, you've seen where they've grown to as businesses now. But that's sort of the first foray. But we've not really had a huge number of similar impactful organizations over the last sort of 25, 30 years.
Yeah, and I think probably we're only just getting to the point where we can start to ask what is Reinsurtech, because it has been more when is Reinsurtech for a long time, right? We've been waiting ever since then, I guess, for more of a category to emerge. As you say, there was this long pause almost, where it was almost, that's the box checked. We have some form of technology being used in reinsurance now, and we'll carry on with everything else sort of absent of new technology. So people were using catastrophe models for property business, catastrophe-exposed property business for decades now, which has been brilliant for that. But actually, there's been a really big gap in the use of, firstly, other lines of business and their modeling efforts for a long time. We'll come into that, I think, a bit during this episode to see how that's changed. But then looking at how technology can be used in and around reinsurance transactions, administration, deal-making, etc., accounting and settlement, all these different areas have been much less specifically impacted by what in other industries has been a digital revolution over the past now 10, 15 years. But I think, we're obviously very well positioned to talk about this from our own perspective as our Supercede hats on.
Yeah.
In terms of that's basically why we started our company, because there was a massive gap in solutions being provided for the reinsurance industry. But it seems others are getting on board and doing similar things in different spaces, which is quite exciting for the category of Reinsurtech as a whole.
Well, I think it's beginning to emerge partly following the trend that you're seeing of the fracturing of technology across all organizations, where you've left sort of the monolithic approach of, oh, SAP built us all this, or Oracle built us everything that we have, and we went to one massive software company who built all the things our company might need. And you've touched on the sort of spectrum of everything from premiums and accounting and claims accounting, settlements, financial management, all these types of things. And even a company that was relatively complex that did both insurance and reinsurance activities could have those single house developers sort of build them all the things that they need, or they build everything in house. But you've seen over the last sort of several years, a shift away from that model and more towards specialty software, specialty solutions, looking at specific areas of need or of pain points. And I think on the back of that, the same thing is driving through on reinsurance, going, well, we want something to specifically do our reinsurance accounting or our reinsurance policy management or our reinsurance actuarial models and these types of things. So you're beginning to see the industry shift off the back of that broader trend, I think, making it an opportunity for a variety of companies to sort of pop into this space.
I don't know if you'd agree with this, but I think the cloud, that big mysterious thing in the sky that's not actually in the sky, is probably owed the most credit for this change in some ways. And again, being a very risk-averse industry, it's been one of the slower industries, I'd say, reinsurance, to adopt the cloud. But as companies have started to do so, it's enabled them to, as you described, step away from building everything in-house on a mainframe legacy systems. It's become much more focused on agility instead. So rather than, as you say, contracting with a large external party to help you build something, or doing it purely in-house, and to some extent trying to make sure it follows industry standards, there's been an ability to say, oh, actually, I can plug this in and start using it right away without having to run a huge implementation project. I can be confident that my data is going to be even more secure because it's being hosted with massive cloud provider X, and all they do is host on the cloud. But then also beyond that, when they're trying to then plug out of these solutions, we talk about how much issue legacy systems causes our industry. With those kind of SaaS solutions plugged into the cloud, you can unplug very quickly as well and change to a superior solution as they come along. So I think that is something which opens up possibilities in all those different areas. We're seeing not just an enablement of new systems in each of those categories we mentioned. So new accounting systems, new policy admin systems, new modeling systems, but also then the ability for those systems to easily exchange data in a way that wasn't really possible when things were siloed into a dark corner of the business.
Well, I think that's one of the big drivers, is you're seeing this increase of accessible data in such a way that companies are going, well, now that we have all this in one place, now that we can sort of interrogate this data set with questions we might have, how can we do that better, right? And for so long, the industry was working sort of on a much higher level. We've talked about this numerous times, but where you have it where, what's the trend of that portfolio? Are the premiums kind of going up, and is that book generally profitable, barring catastrophe events or similar? But now they're able to look at it going, well, we can actually drill into granular policyholder detail. We can group that together and do different things with it. But now, because I have all this data at my disposal that I've never had before, I really want to do more with it. And they look around, and there's no one helping them do more with it. And it's an opportunity for these companies to begin to pop up going, oh, we specialize in helping you get X insights out of that sort of data, or aggregate that data in such a way that you can compare it year over year, or present it in a way that you can share with your counterparties more effectively and let them ingest it into tools that they might want to price on, or like all these things are emerging organically out of the back of getting the data into sort of a more digestible place, which I think took us a long time to get to, from your earlier comments about the cloud and everything else, which is spot on.
And I think people would agree with everything you've just said almost generically about Insurtech as a higher category almost. What makes it start to feel different when we go into Reinsurtech? Or maybe a better question is, what makes reinsurance different that requires some of the Insurtech or Insurtech solutions to sort of become more specific in their approach?
Yeah, I think it's a complicated question to answer, I think, because most people think the parallels between, or the delta between insurance and reinsurance is quite small. Even companies who build software for insurance be like, oh, we'll also do reinsurance now. And only when you get into it do they realize the amount of difference between those two categories, or those two industries. So I think it's almost spinning out from that. It's really showcasing that after so many years of just trying to adopt an insurance solution and sort of figure out back ways and workarounds to make it work for the reinsurance business, that people are sort of fed up trying to do that. But I think there's this broader sense that, oh, it's sort of like insurance. It's just the next thing that insurance does, but it's actually quite a bit different across a variety of sectors.
Yeah, no, I agree, and it's interesting when you said, or even as I asked the question, I started to think myself about reinsurance versus insurance is one thing, but then even within reinsurance, you have life versus non-life, and treaty versus FAC, and cat and non-cat, long tail, short tail, etc. And trying to work out the level of detail to go to with any given solution is very important, I think, in terms of how likely you are to gain any kind of adoption for your solution. If you go in with, we've got a specialist solution for marine reinsurance, that would be very useful to some marine reinsurance people, perhaps, but you can't really sell it to anybody else because it is that specific niche. Whereas if you go in with something which is, we do, all insurance and reinsurance, that's too broad, because when you get to the marine reinsurance thing, they're going to be like, oh, I need this counted in ships and where they are in the world at any given point in time, and so on. So it starts to break very quickly if you go too broad, but application starts to become really small if you're too focused.
Well, and I think you get to see this what's encompassed in that universe is quite varied still. So you mentioned treaty and FAC, but you also have things like cat bonds and ILWs and all of these things. One of the interesting companies that is sort of in this space is Vestu, who's raised a significant amount of money now, but is sort of pooling alternative capital to deploy via like ILS vehicles into reinsurance contracts. But their model is designed to help the people who want to put their capacity into to play better understand the risk and the portfolio and the returns on those risks and all these types of things. Like, it's a fundamentally different proposition for that part of the industry, and it wouldn't be something at all that a Guidewire, a Duck Creek, or the big traditional insurance technology companies would be building, because it's so niche and nuanced, but it applies specifically to one element of this chain, but an element that seems like it deserves a little bit of its own attention. It's like you have all these investors who are trying to find ways to invest in this space. It's kind of a black box currently, and they're sort of helping to provide value there.
I think you're absolutely right. I think you can, even when we start to look at this space, we talk about what zone are you applying your technology to, which could be line of business, type of deal, type of customer, region, all those different factors. But then on a different level, you're also looking at stage of the process as well. I think we at Supercede are very focused on deals, right? Like, as in, how do you get ready for a deal, and how do you get that deal done, and how do you get everything you need post-deal to be able to make recording and renewing that deal the following year as simple as possible. So we're very deal focused, but upstream and downstream, there's a lot that goes on, right? There's claims, of course, which is technically what you're buying when you buy reinsurance. I think a fairly limited amount of technology that's come out for reinsurance claims, specifically at the moment. Loads on the Insurtech side for spotting fraud and so on, but on the reinsurance side, relatively limited change there. The other end, you've just mentioned capital. We've seen a number of efforts try to change the way in which the market can access capital through technology, vehicles more efficiently set up, mini marketplaces that have had some kind of early forages into, could you start commoditizing reinsurance capital in different ways? We had the B3I market initiative for a while. And then when you get down to sort of the nuts and bolts of everything, of course, you have your accounting and settlement solutions, which are, how do you more efficiently account for and create a ledger of deals? And there are various payments, that go back and forth with all the complexities of different operating entities and rebates and premiums being recalculated and return premiums and additional premiums depending on how a contract has gone or how much volume has gone through a treaty, etc. There's lots of complexity in our space to be addressed, but where do you start as a provider?
Well, I think there's two things I wanted to touch on there. The first is that complexity for reinsurance is spot on. If you if like we're in this building now, you say, what is the insurance on this building every year? They'd probably say this how much for the property and maybe this much for casualty. And this is the amount. That's a multi-paragraph answer for a reinsurance contract, right? Based on how it gets settled, when payments come through, when it gets adjusted, how rates have been set, and all these types of things. So that's one of those examples. But when you think about where do you start, this is the other thing that's so important is you look at all those different parts of the value chain. It goes both up and downstream, but it also goes sort of vertically as well, down like into the more granular components of it and to a higher level. And too many efforts historically have just tried to say, we will do all of that. And I think this was one of the struggles that B3I had, was they tried to do all of it in one fell swoop and on blockchain, which was a bit of a decision that was made them struggle a bit more. But with that fracturing and that more fragmented approach to technology and allowing technology and data to flow elsewhere in the chain, it's actually allowing companies to go, someone else will do that and someone else will do that. All we want to do is do this thing very, very well. And they're, by doing so, they're able to provide more value to their customers, and then even find partnerships that say, oh, well, we don't do pricing, so here's other players who do pricing really well that we can connect into. So if you want to build a pricing solution as well, here's how we can help you with that, but focusing on the thing that you want to do really, really well. And I think you're seeing that emerge, and that's driving more value to this reinsurance technology vertical.
So we've got to chat APIs at this point, I feel, right? Because that's the really exciting piece. Building on the cloud element, building on the ability to share data between your many different specialist providers.
Yep.
That's something I think where we could see reinsurance transformed, because you've got data that you want to feed into accounting and settlement systems from a deal. You've got data that you want to send into modeling systems from a deal. You want to send data that typically wasn't available to you before from third-party providers into a system of record of some kind. So much of that data historically has just been a nightmare to move around. We just haven't had the infrastructure to move data about in our industry. It's been manually copy and paste it from that database into a spreadsheet and then rekey it into another database, which is impossible. And so that's, for me, the advent of, or the growing adoption of APIs is something that's really going to change how we do everything. I know Supercede, for example, we've got a new badge recently, which is exciting. So look out for our Adept integrated badge as we embrace the Accord new integrations. But it's much more than that. We've got now, with one of our clients, for example, we've got a really exciting API that goes straight into their back end for all their deals now. So whenever anything happens on a deal, it's like, it's now in our internal system of record. It gets very exciting when you think how many different connections you can create around the actual reinsurance transaction. Yeah.
Well, and it's for things that are seemingly mundane to some people, but are really important for like certain roles. That data API you just mentioned allows that client to immediately after bind get a look at how much premium is going to every single reinsurer that they work with. Like, we know from experience that historically that's like something you'd get in March.
Yeah.
Right. If someone's rekeyed every single signing page and they put it on the spreadsheet and they've tried to have that, like, it's unbelievably painful. And we can automate that in a way that's like, the second anything gets bound, all those codes get linked up. They're all matched to your back office. You can instantly get a look at where your relationships sit. And those are the things that are going to accelerate the conversations during renewals. They're going to accelerate the conversations you have around looking forward to upcoming, relationship meetings and interim renewals and fact deals. All of those things begin to give you real-time information that, has historically been several months delayed in our industry.
And I think it's really important to call out something you mentioned briefly there, all the reinsurers. One of the biggest differences, I think, between Insurtech and Reinsurtech has been that in the early days of the Insurtech revolution, the lowest hanging fruit was single party kind of transactions, whereas it's, in the earlier stage, insurer direct to individual policyholder. I want to buy car insurance from you, make it easier for me. Reinsurance very rarely looks like that.
Yeah.
Typically, it's a tripartite, anyway, transaction involving three people, or three parties, or three types of party in our case. The cedent who's getting the reinsurance, the broker who's helping to manage the deal and construct the deal for both parties, and then the reinsurers, typically, who each take a share of the deal sort of constructed by the broker. Mm-hmm. And, we've seen deals, it's what we call a subscription market that enables this, but we've seen deals that have got 2 or 3 broking firms on them with different orders each to take away 40 or 50, the reinsurers each participating with 0.5%, 1%, 3% on each of 8 different layers. Yeah. Right. That's when we're talking Reinsurtech. Yeah. Not Insurtech. Right? Yeah. But so that's something I think that has been quite a big barrier for a long time. But again, it's that kind of complexity that really creates opportunity for simplification, for computers to step in where humans would normally be required, and humans would be commonly found to have made mistakes that need fixing.
Yeah. Well, and I think you're seeing as well, and it'll be interesting to see if this follows as sort of the investment market landscape evolves a little bit and shifts a little bit. What we were seeing was a real surge in people leaving the industry to start companies doing these sort of things. Someone who'd spent much of their career in an accounting role, working with the complexity of reinsurance accounts for a big carrier, going, this can be better. And we're going to go away and build a technology company to make this thing better. Because I know so many students around the world wrestle with this, and that's kind of the background that we have. I would like to see that continue. I'm optimistic that will continue. Someone who's worked at, portfolio optimization at a big reinsurer jumping out and saying, you know what, I can build this because I know a bunch of other reinsurers will want to have a way to look at these types of things. And that's sort of the driver of this sort of surge in innovation. It's people who've come from reinsurance, who've seen things that they go, I really wish computers would have helped me back in the day on this. And now they have the opportunity to make that happen.
Yeah. And I think those are also the people who will understand why you can't shortcut some of the problems as well. And understanding that actually a solution that advantages one party of the 3 parties and annoys the others is never going to take off. Yeah. Because as we've talked about many times on this podcast, this is a relationships industry, right? You need to invest in and bring in solutions that not only make your life easier, but also make your business partners' lives easier and better. I think that's something that we will talk about more in future episodes. But for now, I'm getting Cordy frantically doing his "It's the end of the episode" dance.
It's one of our favorite dances.
It is one of our favorite dances. And therefore, we will have to end. But we'll see you next time.
See you next time.